I believe we will definitely see even more banks collapse. What they're trying to do is engineer a soft landing. But the problem is that we are transitioning into a new system, so there's no such thing as a soft landing. They need a crisis.
Hi everyone, I'm Mark from AFX Pro Trading. So as you know, I follow gold quite a bit. Even though I trade FX, I look at everything else, and I put a video out a few months on gold. Just doing an update on that, on where it is and the situation behind the scenes, what's causing a major disparity in relation to gold price and gold stocks, the economy, and where everything's heading. I've just added a couple of clips in here of a guy by the name of Peter Schiff. He's a big fund manager overseas. He's called the crashes and corrections pretty well spot on. He's been put down by the powers that be because he speaks the truth. He's not frightened to say what needs to be said. So as you all know in the world today, is if you speak the truth and are forceful about it, you have to be removed or black banned. So they tried that. He owned a bank. They took the bank away from him because he wouldn't shut his mouth and do what he was supposed to do. That's the sort of guy he is. So first part of the clip, he just comes through and explains why we're in the situation that we are in today, leading up to where we're heading with gold, and how we're sucked into a narrative created by the big end of town, which is purely designed to enrich them and to drive more people into the ground. So let's just have a listen.
So there's just no way. And the voters are saying this despite, as you said, being inundated every day with regurgitated propaganda from the mainstream media about how great the economy is. So imagine if the media told the truth, how low Biden's popularity would be. Had the Fed done the right thing following the 2008 financial crisis, we would not be in this predicament. Of course, had the Fed done the right thing prior to the 2008 financial crisis, there would have been no crisis. All of the crises were a byproduct of bad monetary policy. And the monetary policy since the 2008 financial crisis has been much worse than the policy before it. And therefore, the economic collapse that's coming will be much greater and more painful than what we experienced following the 2008 financial crisis. But yeah, I mean, the government is constantly growing in size and imposing a greater burden on the population. At the same time, capitalism is trying to ease that burden by innovating. You know, capitalism is a force for good, government is a force for bad. Capitalism creates abundance, and governments create scarcity. Capitalism increases production and increases quality and lowers cost. Government reduces quality and increases costs, right? So you want more freedom and less government. But unfortunately, we've been headed in with the dollars they're selling. Because in order to get out of the dollar, you have to get into something. They're getting into gold. That's what they've been buying. That's why gold's at an all-time record high today. That's why, despite the fact that individuals have been selling gold for months, gold's hitting a new all-time record high today because central banks are buying the gold to replace the dollar. And that's what's happening. And people haven't woken up. They're too busy distracted by, the con game in crypto to notice what's happening with gold. But on a bigger scale, they're not noticing what this portends for the United States. You don't think these guys know what they're doing? They're in control of the money. What are they doing? They're buying gold. They know what's coming, right? The public is clueless. If you look at the ETF GLD, for the last 9 weeks, money has gone out. 9 weeks of consecutive outflows, a record. As gold keeps making new highs, and now it's at an all-time record high. Normally, the public doesn't do that. The public buys high and sells low. Normally, if gold was making a high, the public would be buying, not selling. They've been selling. Right? That's the dumb money. The smart money is buying as much gold as they can get their hands on. And the media is distracting the public with fool's gold, talking about all these Bitcoin ETFs. A lot of people probably sold gold stocks last week to buy the Bitcoin ETFs. I was taking advantage of that. I was putting more of my own money into gold stocks. Newmont Mining last week hit a 5-year low. This week, gold hit an all-time record high. That's never happened. People are dumping gold stocks while gold prices are soaring. That's how clueless people are. They've been so dumbed down by the mainstream media that they don't know what's happening, and they're not doing the proper things financially. We are very close, I think, to a major explosion up in the price of gold. That's a big thing. It's not gold. The gold price is not just some other commodity. If gold is really going up, that is the canary in the coal mine. You better get the hell out of that mine because something bad is going to happen. And the Fed is, of course, ignoring all these warning signs, and most investors are too.
Okay, so there's the whole situation in a nutshell, explained perfectly. And why we see gold stocks here in Australia doing the same thing on 5-year lows when gold's making new highs. Where's the money going? It's going into the fanciful Bitcoin and the new ETFs. You know, Bitcoin lovers, digital gold they call it. Well, we're going to see what digital gold produces. There is no assets behind Bitcoin. It is thin air. You know, Bitcoin's like a balloon full of water being held up by a single cotton thread, right? They're pulling it higher and higher and higher against the gravity. At some point, that thread's going to break. And what do you think that balloon full of water is going to do? It's going to do what everything else does when it's overinflated. Is it overinflated? Guess what? What is every mum and dad launching into now? Oh dear, it is darling Bitcoin. And as Peter said, and as I know, as soon as you get the mums and dads in, the mums and dads are the ones that buy the top and sell the bottom. They are fodder for the big end of town. That's what happens, right? And it's been going on since the inception of the stock market. The dumb money buy the top and the dumb money sell the bottom. So, what don't you hear about in the media? You don't hear about gold making new highs, do you? It is all quiet and dull down. We've been drummed for the last 10 years that gold's never worth anything. Gold standards no more. Don't worry about gold, it's going to crash, it's going to go through the floor. And that narrative comes from, as Peter said, the big end of town. The central banks are buying the gold massively. Russia and China are the two biggest, more so Russia, own the lion's share of gold. What a surprise. And what's America doing? Holds basically nothing. It's all been given away. So the takeaway from that is, let's just come through and have a look at a couple of stocks in Australia, and just to give you an idea of where things are and what's going on. Okay, so first up, let's just do a recap of the Dow Jones and the longer term targets, and let's see what we've got coming up for it. So that's a daily chart. Long term, we want to go to a weekly chart and have a look at that. So we go to a weekly here. Now we've got two PT3s, and this is the formation that I use in FX. We've got this guy over here, is the bottom of the run, the first one up, and this one here is where we break the previous high. So we've got two here. This is a longer term one, and this is a nearer term one here. So all I'm using is this tool that comes out of here. So the you guys that are familiar with what I do, the PT2 formation that's marked automatically on the chart, the targets are a 2 for 1. There's a certain bar formation that I increase the target by 50%, which is a 3 to 1, and also 100%, which is 4 to 1. Now, it's part of what I teach. I'm not going to disclose how that works, but in this situation here, in this run up here, we are in a 4 to 1. So we're in a 100% extension at present. So let's have a look at this. Long position, if we throw this on here, set that on those lines there. That's got to come up just a little bit there. So if we look at this figure here, we take that up to, there's the 2 to 1, we're nearly there, but we're going up to 4 to 1. There, and there, there's the arrow. So there's the first level for the Dow Jones, 44,640. When we get to that, we are going to have some sort of correction and pullback from there. We may have little ones in the middle, but this one here will be more significant. If we now go back here to the larger one at the very bottom, so in this scenario here, in this length of time, I've got a 50% extension here, plus the 100 in this one, so that's 150. So that's 6 times our head formation. So we want 6 sections. Well, let's see, the arrow should be somewhere getting up here, 5, 6. There we are there, 55,000. That's a long range target for the Dow. This is going to be after this correction here, up to this one here, correct there, and this is the next phase. That there is going to be something like probably 2027, 2028. Okay, so here we are with a 1 week chart on gold. We get that out of the road for a minute. Now, we can't get any too much handles out here. We've got a situation from back here, and we've got 100% there. So that's there, and that's where we are at present. Let's just have a closer look at that there. So we have got from there to here, and we want a 4 to 1. And where did we get to on Friday? Oh dear, eh? Last week. There was the high of last week. There's the 4 to 1 from there. So now we should get a retracement, probably back down to this level here. Maybe even broach the 2000 level, something like that. So that's a weekly. Let's have a look at a monthly. Okay. If we come to, we've got this one breaking from way back down here, and let's see what we've got in the mix. We've got a 50% and on that one, which is going to be a 3 to 1. So let's just drop that on here and see where that comes to. It should nearly line up with where we are now, because that's the sequence there. Yep, so there's that one there from, this is on a super wide, this is the monthly perspective. There, we haven't quite hit it. If we have a look at this here on, let's go to say a 3 months and have a look at what we got, if there's anything that we can work with there, preferably a 6 month. No, let's go to a 6 month and see what we've got, which is a better long range situation. So a 6 month, we have got, here it is here, the breakout here. So let's just come through and see where we can expect the price of gold to travel to. So there is on there, that's on the bottom there. Now, have we got, there's no extensions on that at present, and we're not going to get anything in the immediate future because we're a fair way up there. So at present we're looking just at a straight old 2 to 1. There it is there, 2,800. So there's the first massive roadblock we're going to see is 2,836. Again, how long that's going to take to get there, if I knew that, I would be a multi-millionaire. I don't know. It's going to be sometime between now and the next 3 or 4 years' time. May not even take that much. The powers that be keep saying when gold goes, it's going to go overnight. Well, let's hope it does. If we look at an even wider instance, let's see if we can get anything out of 12 months in here. And I think I've did this chart before. And we end up somewhere up in here. That's the breakthrough there. If we have a quick look at this, redo it again on here. So we've got there, down to here. And at present we've got 2. And there it is up there, 3,994, $4,000 an ounce. And how long it takes to get there, we don't know. So, you know, you look at this here and you say, well, how does that work? You can't go on that. Well, I can assure you it does work. So if we go back and have a look at this a bit further back, if this idea is worth its weight in gold or not, if we look at a long position, we've got a breakout here and we've got 100% straight away. So this is on a 6-month chart. And we'll just stretch that up a little bit and see if we can get a bit more depth out of it there. Whoops. Grabbing the wrong thing. And we go to here. And we've got a 4-to-1 there. 1, 2, 3, 4. Right there. What happens? Hits the 4-to-1, comes back, there's retracement. This is what happens. As soon as you use this PT3, along with extensions, and as soon as you get 100% extension, when it hits that level, it's just like a slingshot that goes off. It's stretched that far. So from there, we now go up onto the one that breaks out there. Okay. Now bear in mind that was from 04 through to 09. Now we've got this one here. And we have got a 50% extension, so that's going to be 3 sections. Let's see where this one takes us to. And there again, there's our 2,800, which is what we had, I think, on the weekly chart as well. And 2,800, and you can already see this one that's in here. There's the 2-to-1 to that one lined up. So around this 2,800 is going to be a significant level for the price of gold as it moves forward. All right, just quickly, let's have a look at a couple of gold stocks. I'm not promoting these stocks. They're nothing to do with what I do. I'm just going to come through the watch list and just show you half a dozen where they are in the scheme of things and why I believe gold stocks are very, very good value and extremely oversold at present and represent great value for the future. Okay, Warrior Resources. Back here in 20 was up on 41 cents. Where is it now? Back here on 3 cents. This one here is tied up with nickel and that as well. But, you know, over here, what they were down around here, 0.08 of a cent. Actually got up to 15 cents. Back down again. Dateline Resources, no idea what they are. Highs here, back down. De Grey Mining, it's one of the ones that's sort of held a little bit. They've come up had a massive rise. They went from a exploration to producing and doing quite good. But even there, you know, gold's making new highs and they're battling to even hold their position. Ramelius Resources had somewhat of a, they're producing, of course. Back here in 18, went from 58 cents up to there, been down and holding. So it's one of the ones, but even so, it's still $1.40 compared to $2.48. Gold's making new highs. Why isn't that price above there? Taurus Metals, it's a great company. I think it's more in line with lithium. Anything that's got lithium tied to it, you can forget it. I mean, the electric vehicle, let's say euphoria like Bitcoin is well and truly over. Everyone's realised that electric cars are a waste of space, time, energy and money. They are just an absolute liability and they're not going to do anything what they're promoted to do. Ares Resources, it was one that was promoted, had the best future going. There it is. Let me bring this back across onto here so we can see what's what on here. 16.5 cents, been $1.50. QPM, Queensland Pacific Metals, down, and so forth and so on. Up, down. Argosy Minerals, that will no doubt have nickel in it as well, which has been smashed to the curb. Anyway, guys, this is just what I see happening in the market and an explanation as to why things are as they are in this present day when nothing makes sense. Everything is back to front to what it should be. Basically, we are being set up, or the biggest con game in history is what's about to unfold. That's where we're heading. So take care with your investing. As I say, this is not financial advice. I do not suggest in any way, shape or form that you buy the stocks that I'm talking about. They are just examples in general of where anything related to minerals and gold is at present, and that they represent a buying opportunity that I believe, you know, in 15 years' time is going to be something very, very fruitful. It's like looking back to real estate in 95, 96, and I was looking around at real estate then, and I had 3 or 4 people that had been real estate all their life, and they said to me, Mark, in no uncertain terms, if you're looking for something to invest in, don't ever buy real estate. It is the worst investment you can get. And what have we been hammered to in the last 10 years? Don't buy gold. It's no longer got its usefulness. It's a waste of time. Buy Bitcoin. It's the way of the future. Fool's gold. That's all it is. All right, guys, take care, and we'll catch you down the track.